Hello, and welcome to this screencast about IPAIC. I have trained a forecast model to forecast the next day's price, the next day's average price. So this is a chart for Apple. It's a daily chart for Apple. We can start by adding the average price. This is just a chart of the daily average. It averages high, low, and close. So what we want to do now is to add Russian prediction to OHLC features. So we will get a second line now, and this line is the next day's forecast price. It's not yet fully optimized, but we can clearly see that even if it doesn't get the actual price every time, it gets the right direction of the trend. So you can see that it was giving higher, the Russian prediction is giving higher value than the daily average while the trend was going up, and on the highest point of that trend the prediction gave a lower number than the daily average, and throughout this downtrend it was behaving in the same way. At the end in here again the prediction is higher than the daily average, and once it reached this peak, our prediction is lower than the daily average, so that's an exit point. Again in here we're getting a prediction that's higher than the daily average, and the very next day lower, which is a very small bump, but you could still make money out of this little variation in price. You can see the downtrend very clearly with the prediction and the daily average. In here again we have an entry signal, and again in here an exit signal where the daily average is higher than the prediction. This is working really. You see this big drop in the price. You had actually a forecast lower than the daily prediction for 3 consecutive days before the big drop, and it was behaving the same way until this day actually, which was the bottom the price got to. The prediction was higher than the daily average until the 14th of February, and on the 18th it gave lower than the daily average, so Apple most probably will go down. Let's check IBM. We'll start by adding the daily average and the prediction, and we can see IBM is giving a signal that it will it might still go higher than what it was in the last close. Let's check also this model actually works for all technology stocks. So let's try Microsoft, for example. Microsoft. add the daily average and the prediction, and we can see this working very clearly, where it gives very clear indication to get out of the stock before this drop. It gave a little signal here. The signal started on this point. It gave a very big difference on this day, and sure enough it kept falling down. This is very clearly identifying changes in trend, basically. So before any big drop, we will always see the prediction lower than the daily average, and let's go back, and in uptrends we will see that reversed. Again, this works for all technology sector stocks. At the daily average and the prediction. And then here we have a signal that Cisco might go lower than the last record we have. Let's see what else we have a very good indicator on. Let's check Adobe. Average, prediction, and although it has been pushing the price for some time, our prediction is still higher than the daily average, so it might keep the uptrend. That's it for this video. Thank you for watching.